Hey everyone! What if I told you a company most people are still ignoring could suddenly unlock hundreds of millions of dollars in cash, build a nationwide AI network, and position itself right at the center of the next technological revolution? Today, we're diving deep into Datavault AI ticker symbol DVLT, and what's unfolding right now is not just another business update, it could be a major turning point. Let's break it down step by step. First, the big picture. Datavault AI is projecting a massive cash inflow of over $200 million. And here's the part that stands out: this is expected to happen without issuing new shares. In simple terms, that means they are raising serious capital without diluting existing shareholders, which is something investors always watch closely. But that's only the beginning. The company already holds a significant reserve of NVIDIA GPUs, and these aren't small numbers. We're talking about hardware with an estimated market value of around $1.2 billion. This gives Datavault AI a powerful foundation to scale its infrastructure quickly, especially in the AI and high-performance computing space where demand is exploding. Now let's move to the deal that's getting the most attention. Datavault AI has entered into a binding agreement with Scilex Holding Company. This deal outlines a $120 million upfront cash contribution from Scilex. In exchange, Scilex will receive a share of the revenue generated from a very specific part of Datavault's business, their upcoming quantum-ready edge network. So what exactly does that mean? Datavault AI is working on building a network of advanced computing infrastructure across approximately 100 cities in the United States. This system is designed to bring powerful computing closer to where data is actually created, instead of relying only on centralized data centers. And here's where things get even more interesting. This network isn't just built for today, it's being designed to be quantum-ready. That means it's engineered with future technologies in mind, including quantum computing and advanced encryption systems that can withstand next-generation cyber threats. Now, let's talk about how the revenue sharing works in this deal. Initially, Scilex will receive 30% of the revenue generated from this network. This continues until they've been paid a total of $250 million. After that milestone is reached, their share drops to 15%, continuing until total payments hit $1.2 billion. And once that level is achieved, Silex's share reduces further to just 5% of the ongoing revenue. This structure is important because it shows a long-term alignment between both companies while still allowing Datavault AI to maintain ownership and benefit from future upside. So where will that $120 million go? The funds are expected to be used for building out the network itself, covering infrastructure, equipment, operational costs, and everything needed to deploy this system at scale. And this isn't just a concept. Datavault AI plans to roll out this network using a fleet of high-performance micro-data centers, developed in collaboration with available infrastructure. Each location will include advanced systems like secure cloud environments, quantum-resistant encryption, and GPUs specifically designed for AI processing at the edge. According to company leadership, this investment is expected to fully support deployment across around 100 cities, delivering capabilities like artificial intelligence processing, high-performance computing, secure enterprise solutions, and even tokenized real-world asset processing across the country. Now let's talk about the potential scale. The projected annual revenue from this network is massive. Estimates suggest that each city could generate anywhere between $100 million to $1 billion per year. When you multiply that across 100 cities, you're looking at a total potential ranging from $10 billion to $100 billion annually. That's not a small opportunity, it's a huge addressable market. The technology behind this system is also designed to support multiple advanced use cases. This includes AI workloads, data monetization, secure communications, and digital asset tokenization, all operating within a highly secure environment built to handle future technological shifts. The rollout timeline is also worth noting. The initial deployment in major cities like New York and Philadelphia is expected to go live in the second quarter of 2026. From there, the company plans to scale quickly, targeting 25 operational locations within the first year, 50 within 2 years, and the full 100-city network within 3 years. As for the deal with Scilex, both companies are working toward finalizing a full agreement, with the investment expected to be completed in multiple stages, potentially wrapping up before the end of 2026. And here's the broader vision. As this network expands across the United States, it could fundamentally change how data is processed, stored, and monetized. Instead of relying on distant centralized systems, businesses and governments will be able to access secure, high-performance computing much closer to where data is generated. This means faster decision-making, improved security, and entirely new possibilities in areas like AI, blockchain-based assets, and enterprise-level digital services. So, when you put it all together, you have a company securing major funding without dilution, holding billions in computing assets, building a nationwide infrastructure designed for the future, and tapping into a market that could reach tens of billions annually. The real question is, can they execute? Because if they do, this isn't just another tech rollout, it could be the early stages of something much bigger. This is not finance advice.